Let's get into that conversation further detail. We have Mr. Niranjan Hiranandani, founder and MD of Hiranandani Group, who joins us on the show. Hi, sir. Good afternoon, and thanks a lot for joining in. Well, the street is a little bit confused with regard to this. For the time being, it's appearing as a negative because long-term capital gains, that was 20%. It's come down to around 12.5%, but the indexation benefit is gone out. But the other way of looking at it is maybe supply gets curtailed, which in turn will be a positive in demand for new homes. How are you viewing this?
We view it very positively. We've been asking for matching the long-term capital gains tax with the capital markets for a long period of time. So historically, those who are investors into the capital markets or also in the case of real estate always looked at this differential of 10% to 20%, which was there in the investments into real estate. So I think the investor market will come back into real estate because of the long-term capital gains tax now being 12.5%. Yes, but for historical properties which are coming into the market, yes, they will have to pay much more for the purpose of it because indexation is sought to be withdrawn. So I think there is an issue of property sale which takes place. But anyway, I think 90% of the investor market would benefit from the reduction in the rates of capital gains tax. And I think that's a very positive move as far as this is concerned. The other part of it, which is very important for the investor market in the long run, is the issue which the finance minister has said she's going to emphasize to the state governments to reduce stamp duty and also other charges which are levied by the local authority and the state government, which is causing an inflation in prices which is unprecedented. So, for instance, in Mumbai, if you take 50% of the cost of expensive homes, they are all part of taxes, whether in terms of stamp duty, whether in terms of development charges, additional FSI, which is there, all these costs are there. And that is also a thought which has come over there for the purpose of it. But affordable housing, those segments which comprises today a large part of the market throughout the country, is going to see a boost, 11 lakh crores. And I think focus urban areas, 1 crore housing in the affordable segment. We have to read the fine print as to how this is going to be done. Is it the same way? Is there a cap on the value of the flat, which was earlier 45 lakhs, which we expected to increase to 75 lakhs or 1 crore? In order to benefit into metropolitan towns like Mumbai, Delhi, Calcutta, Madras. And overall, I do believe that interest rates, hopefully in the next year, with inflation coming under control, I think long-term investment into real estate will continue and the benefit of capital gains tax will be shown for investors to come back from the capital markets to the real estate market.
Mr. Hiranandani, sir, just one quick clarification. For older projects, legacy homes which were bought in the 1970s, 80s, 90s, do the prices get reset to, say, 2000, 2004, as we were made to understand? And from there, the capital gains tax would be calculated at 12.5%?
No, now the reset will not take place, as you have asked. It will be counted on the basis of the cost of the house which took place when you purchased the house. So that is the negative part of it. So in reality, for those homes, when they are sold, they will still have to pay a tax. But if it is a single house and you resell it and you utilize the entire capital gains to buy a new house, then of course there is no tax in terms of it. It will be exempt from taxes. So there are various regulations to be done in terms of legacy homes. But legacy properties which are on sale will certainly have to pay a higher long-term capital gains tax because some of them are inherited properties, old properties. So there will be no other benefit that will be there. There, the taxes will definitely be higher.
Okay, all right.
But all in all, I think real estate should go on the upside.
Okay, all right. Thanks for that perspective, Mr. Hiranandani. Always great to get that. There's about 30 minutes to go, a little over 30 minutes to go for market closing. We're up about 13 points and we're trading in the green. We'll take a quick commercial break here. We're going to come back. We'll have Jigar Mistry with us. Samir Arora will be with us as well. And many more perspectives in terms of what's happening in the market and what the budget does for individual sectors. Stay with us.